It has been a while since I last talked about Hamilton Canadian Financial Yield Maximizer ETF. This ETF here, guys, it started trading at $16, and right now we can see it's $13.65. So it has lost about $2 and some changes, and 52-week range is between $12.54. So at one point it dropped to $12.54, and then it rebounds back to $14.94. So it has tendency to go between 12 to almost 14, and volume, it has almost 1/130, so it's a pretty big volume. It's one of the popular Hamilton ETFs. We look at the yield right now is 15.70. Okay, year to date return as about 4.15. By the way, this ETF is a Canadian ETF, so for US investors, most likely you won't be able to buy this ETF. So if you're a subscriber, you can skip. Only if you have like Interactive Broker, you'll be able to buy this ETF because it's traded on Toronto Stock Exchange. So you need an access to buy this one. So it's mainly for Canadian investors. But you can stick around and learn something, even if you can buy this ETF. So now, the reason I'm making this video is because I want to show you how you can actually generate from 300 to 3,000 monthly using this ETF. So before going to show you that, what I'm going to do is to give you a description about this ETF for a little bit. So we look at on Hamilton website, we can see Hamilton Canadian Financial Yield Maximizer ETF. Ticker symbol is HMAX. And of course, yield right now is 15.21. So we look at the highlight of this ETF. We can see it's 15% and pays monthly distribution, diversified exposure to Canadian 10 largest financials with approximately 70% exposure to the big five banks. So invest in financial companies, but the big chunk of this of this ETF exposure is on the big five banks. So there are 5 biggest banks in Canada, and those are the banks that invest 70% of its money. And then it does dynamic cover call strategy to enhance monthly income and reduce volatility. And who is a perfect investor for this fund will be a person who is looking for high monthly income, investor who is looking for blue chip Canadian banks and financial exposure, for investor who is looking for tax efficient distributions, and if you want to reduce the volatility from your portfolio. So the fund objective, HMAX, is designed for an attractive monthly income while providing exposure to the market cap weighted portfolio of Canadian financial services to reduce volatility and augment dividend income. HMAX will employ an active cover call strategy, and HMAX does not use leverage. The reason they say this is because some of their ETFs from Hamilton use leverage, like 25%, and those are called enhanced ETF. But this one is not enhanced, so they don't use leverage. If we look at performance, year right now is 15.21, and since inception has returned about 1.33, so it's not that great. You can invest in this ETF only if you are looking for an income. What makes this ETF different than other ETF? Okay, so many cover call ETFs write option on 30 to 50% of their portfolio out of the money, but HMAX is able to provide a higher month income with a dynamic cover call strategy, currently writing an option on 50% of their portfolio at the money. This allows HMAX to generate a higher option premium while maintaining 50% upside potential. So what that means is just they put 50% of money on 50% of the portfolio on the call options, and then the rest will live left for growth of the ETF. So we look at the sectors. It has the 3 sectors they invest in. So it's mainly financial, but financial is divided by 3 sectors. The first one is insurance, is only 25%. We look at the banks, it's 67%, and then financial management companies, it's only 11.2%. Holdings, these are the main holdings right here: Royal Bank of Canada, and there's Toronto Dominion Bank, Brookfield Corp, Bank of Montreal, Bank of Nova Scotia, Canadian Imperial Bank, Manulife, Sun Life Financial, Intact Financial, Great West Life. So Grevis Life, for example, in Sun Life, these are insurance companies, and Intact is insurance company. Like Brookfield Corp, this is a financial management company, and then the bigger bank, Royal Bank and Toronto, these are the Scotia Bank, these are the bigger banks. So inception of this fund was incepted in January 20th, 2023, and investment style is active cover call strategy, and then the yield right now is the yield target is 13, but right now it's over 15%. So the yield is more than the yield targets. So distribution, it pays monthly, and then rebalance is semi-annually. So what they have a target mix. So right now we can see Royal Bank has outperformed the rest. So semi-annually, they'll go back and rebalance this to make sure one company does not dominate the whole portfolio, which is good. We look at management fee, it's only 0.65, so it's not that much, right? 0.65 basis point is good, and risk is medium. If we look at distribution, we can see they've paid this fund has been out on the market more than a year, and maybe almost close to a year and 6 months, and they've been paying since then about 18 cents. If you round up, this one is almost 19 cents, but and then the first one they pay 18 of course, so about 19 cents. And then right now, the last time they paid was on June 7th. Of course, that's the dividend is going to get paid, and that was 17 cents. And if we come to this spreadsheet here, we can see this is a payable date, and this is the amount they've paid, and this is distribution since this is 12 months distribution. Within 12 months period, they've paid $2.29 combined altogether. And then if we average out, since within 12 months period, they've paid only 18 cents per share. So now I'm going to show you how you can generate 300 to 3,000 a month using this ETF. Before going there, just make sure if you are not a subscriber and you don't want to miss this type of update and guidance, just make sure you subscribe. And then if you like this content, just make sure you give me a like. Now let's go to next chapter. Here we can see the price is 13.65 and average is about 18 cents. Using the average, the yield will be about 16% right now with the current price as of today. So I'm going to show you how you can generate that 300 to 3,000 a month. I put different type of investment that you can put, because some people would have more, some people would have less, so I just cover pretty much everything, right? So now if you have $25,000, you will get about 1,832 shares, and that will give you 330 a month, and your annual income will only gonna be 3,956. That's not gonna be enough money for you to retire, but it's something you can use to buy something, right? Now if you put 50,000, then you're gonna get about 600 a month, and that will give you 7,000 a year. So I put 25, I increased by 25, right? It goes over to 100 is going to give you 1,319. That'll be just enough money to pay a lot of bills, but it's not going to be enough money for you to actually outright retire. But now annual income will be $15,824. But if you skip, you go all the way to 200,000, that's going to give you $2,634, and it will give you 31,648. That you're becoming closer to like lower income people. That's how much they make, right? In about 30,000, 26 to 31, that's a lower income. So pretty much barely gonna pay any taxes if you retire with this amount of money. The only person who can retire with 31,000 is the person who has other income, and this is just extra. But now if you want to be serious and you want to actually use this to outright retire, you have to go all the way to more than 300,000, which 300,000 will give you about 47,000. So 47, we talk about enough money. It depends what city you live in, right? And then the monthly income will give you almost about $4,000. So this is just a guidance, right? But if you want more, then you add more. Again, this ETF pays very little, because we can see here is only 16%. Now, if you want to generate more money than that, I have other videos I made. You can actually just invest 100,000 and then pretty much you can retire with HMAX ETFs. I have a guidance. Just check my next video. Till we meet again next video. That's all I have for today, guys. Bye bye.